FJET explodes 300%, then crashes. What's next for space stocks? Imagine you wake up, pull up your watch list, and see a brand new ticker moving like a crypto coin. FJET, up hundreds of percent. Socials going crazy. Volume ripping, then, almost as quickly, it gives a huge chunk of it right back. That's not a movie plot. That's literally what just happened around Starfighters Space's first days as a public company. And it's the perfect real-time case study for how space stocks can make you feel like a genius and then humble you in the same week. As of today, Tuesday, December 23, 2025, FJET's last close, shown on FinViz, is $17.34 after a steep pullback of about minus 44.95% from the prior close, with the prior close shown as $31.50. So yes, the crash part is very real, and that prior close of $31.5 lines up with the explodes part too. Investors Business Daily reported that the stock surged 370% on its third trading day after the IPO, with the move tied to the company's splashy market debut and the feverish appetite investors have for anything that sounds like new space. So what do you do with a chart that basically looks like a rocket launch followed by re-entry turbulence? You don't start by asking, this stock good or bad? You start by asking, what kind of move is this? And what forces created it? Because the truth is, in the first days after an IPO, especially a small one-price action can be dominated by mechanics more than fundamentals. Limited float, hype, wide spreads, and traders crowding into the same door at the same time. In FJET's case, we're talking about a newly listed company that, according to IBD, raised about $40 million at $3.59 per share, and then immediately entered the low float spotlight, where a little demand can create a lot of price movement. When supply is tight, the stock doesn't climb stairs, it takes elevators. But elevators also go down. FinViz even summarizes the vibe bluntly. Profit-taking triggered sharp pullback after prior day's 370% retail-driven surge on low-float IPO stock. That's basically the story of a ton of explosive IPO pops. Day 1, Day 2, Day 3 price discovery is chaotic. And the market is trying to decide what the company is actually worth, while a whole crowd is trying to front-run the crowd. Now, let's talk about what Starfighters Space actually is, because the what's next depends on whether this becomes a real operating business story or stays a momentum-only story. Starfighters Space describes itself as an aerospace company operating what it calls the world's largest commercial supersonic aircraft fleet, built around Lockheed F-10 for starfighters, and it says it supports high-speed, high-altitude testing, pilot training, research missions, and a space-adjacent platform concept. IBD also said the company is developing a Star Launch program concept aimed at deploying small payloads and satellites using these jets, and noted partnerships it says it has with major aerospace entities like Lockheed Martin, GE Aerospace, and the U.S. Air Force Research Laboratory. And today's company update carried via a Business Wire release leans hard into the idea that this is not just cool jets, but a platform aligned with defense, testing, and commercial space needs, while also pointing to the policy environment. The release references a White House executive order dated December 18, 2025, titled, Ensuring American Space Superiority, framing it as supportive of commercial space capabilities and rapid testing. Here's why that matters for the next chapter. Hype can launch a price, but only business execution can hold it up after the initial excitement fades. When a ticker goes vertical, the market is basically borrowing future good news and pricing it in early. If the company then delivers real milestones, contracts, revenue traction, credible timelines, regulatory progress, that early pricing can sometimes turn into a longer trend. If it doesn't, gravity returns. So the question isn't, will it go back up tomorrow? The question is, what would have to be true in real life for a company like this to be valued like a long-term space infrastructure play instead of a short-term trading event? And to answer that, you need a simple mental model. Separate the story, the math, and the calendar. The story is obvious: supersonic fleet, unique platform, potential payload deployment concept, defense, or testing alignment. The math is more boring but more important. How much revenue exists today? How lumpy it is? What margins might look like? What ongoing capital needs are? And how many shares could exist once the dust settles? The calendar is the silent killer in new listings. Lockups, registration statements, potential additional offerings, and any dates where the supply of tradable shares could increase. Even if you never read a full filing, you can still respect the calendar by watching for share count changes, new resale registrations, or sudden shifts in volume patterns. In low float names, supply changes can matter as much as demand changes. That's why you get these launch and crash sequences. The first wave is excitement. The second wave is reality colliding with positioning. The third wave is either stabilization if new buyers step in at a rational level, or continued air pockets if everyone who wanted to buy already did. So, what's next for FJET specifically? Realistically, there are three broad paths, and you don't need a crystal ball to understand them. Path 1. It becomes a momentum favorite again, where traders treat dips like reload zones as long as volume and attention stay high. That can happen in new listings, especially when the company's theme is hot and headlines keep coming. But it usually stays volatile, because the same mechanism that created the upside crowded attention can reverse fast. Path 2. It reverts toward a calmer valuation band as the opening week premium fades, especially if the broader market mood shifts risk off or if attention rotates to the next shiny ticker. Path 3. It chops violently, forming a range, until the market gets more concrete information, earnings, guidance, contracts, and filings that clarify the share structure and business trajectory. If you're trying to be smart rather than emotional, what to watch is the key. Not vibes, but triggers. Watch for anything that validates the star launch concept with specifics, timelines, customers, test milestones, anything that confirms recurring demand for high-speed testing services, and anything that signals how the company plans to fund growth. Also watch how the stock behaves on quiet news days. If it can hold levels without constant hype, that's a different character than a stock that only stays up when the internet is screaming. Now, zoom out. FJET is the micro drama, but space stocks, as a whole, are having a macro moment, and this is where it gets interesting because the sector is no longer just about moonshots. It's about national security budgets, communications infrastructure, Earth data, and launch cadence. Let's talk about the biggest point everyone misses. Space isn't one industry, it's several industries that happen to operate above the atmosphere. So when you ask, what's next? You should be asking, which lane of space is getting the strongest tailwinds? Take Rocket Lab, for example, a company that's increasingly treated not just as a launch provider, but as a defense and satellite systems contractor. In late 2025 coverage, Rocket Lab has been tied to major government work, including reporting around a Space Development Agency contract in the $800+ million range for missile defense-related satellites, and analysts hiking targets as backlog grows. MarketWatch showed Rocket Lab around the low 70s this morning, December 23, 2025, and recent reporting noted it had hit the high 70s in the surge. That's a different kind of space stock story than an early speculative concept. It's a contract flow plus execution plus defense tailwind story. And if the market keeps rewarding tangible backlog and government demand, companies with real contracts can sometimes get longer leashes than companies with only narratives. Now look at AST Space Mobile, which is basically in the direct-to-device space telecom lane, and that lane is currently headline central because of the Bluebird 6 launch. MarketWatch reported AST surged as the company prepared to launch its next-gen Bluebird 6 satellite on Tuesday evening, December 23, 2025, and framed it as the start of an aggressive build-out cadence for 2026. Space.com also covered that an Indian LVM-3 rocket was scheduled to launch Bluebird 6 tonight, December 23, and ISRO's own mission page describes the satellite as part of the Bluebird Block 2 generation designed for space-based cellular broadband directly to standard smartphones, noting the mission's significance. That's space stock, with a clear near-term catalyst, a launch you can literally watch, a technology milestone you can measure, and a future revenue model tied to partnerships with mobile operators. MarketWatch noted Verizon among them. The risk is also clear. Execution is hard. Satellites are expensive, and timelines can slip, but when the catalyst is real and date-stamped, the market pays attention. Next, LUNR services and exploration infrastructure, where Intuitive Machines lives. The catalyst pattern there tends to be contract decisions and mission timelines rather than daily consumer hype, and the company itself has recently talked about building capability via acquisitions, like its announced move to acquire LUNR Space Systems Company release, November 2025. That's still speculative in the sense that outcomes depend on contracts and missions, but it's a different flavor of speculative than a pure concept. It's can you win awards and deliver? Finally, Earth observation and data. Planet Labs. Reuters reported Planet planned to invest an 8-figure sum in a Berlin satellite production site to expand high-resolution capacity, which fits the thesis that Earth data becomes more valuable as governments and enterprises want faster, higher quality intelligence and monitoring. Planet also announced contract-related news in 2025, including an 8-figure contract renewal covered by major finance outlets. That lane tends to be less meme rocket ship and more subscription plus government demand plus data mode, though it can still be volatile because the market swings between valuing growth and valuing profits. And then there's Virgin Galactic, which sits in the human spaceflight high-altitude platform lane. MarketWatch noted a recent trading day surge and tracked its performance versus its 52-week high, and the company itself announced partnerships like its work with Lawrence Livermore National Laboratory to advance high-altitude image capture technology, December 15, 2025. So, what's next for space stocks really means which lane gets the most capital in 2026 defense architectures, direct-to-device, Earth data, lunar logistics, or experimental platforms, and which companies can turn that lane's tailwinds into repeatable revenue. Here's the clean way to bring this back to FJET. If Starfighters Space wants to graduate from wild IPO chart to space infrastructure contender, it needs to prove it belongs in one of the lanes the market is funding. The company's own communications are pointing toward defense testing and commercial space-adjacent missions, with an emphasis on speed, flexible platforms, and the policy environment supporting commercial capability integration. If it can translate that into visible milestone-signed customers, repeatable mission profiles, and credible progress on any payload deployment program, then over time the conversation can shift from, "Did you see that candle?" to "Did you see that contract?" But if updates stay broad while the stock's float expands and the initial trading frenzy cools, then price may keep swinging without a stable base. And that's the deeper lesson. In space stocks, the coolest part of the story is often the easiest part to sell, but the hardest part operations. Cadence, budgets, margins, execution determines the long-term chart. So if you're watching this sector, treat it like a map, not a lottery ticket. Put every ticker into a lane, define the next 2 or 3 measurable milestones, and decide ahead of time what progress actually looks like. For FJET, today's facts are already dramatic enough. A huge early spike, IBD's 370% day 3 headline, followed by a sharp pullback, FinViz showing -40 for 0.95% to $17.34 are December 23rd. The next facts that matter will be boring on purpose. Filings, execution updates, customer traction, and whether the company's 2026 priorities turn into results. Space stocks can absolutely run. Rocket Lab's contract-driven momentum and AST's launch-driven excitement prove the sector has real catalysts right now, but the sector can also punish anyone who confuses a headline with a business. And that's how I want to close this. The goal isn't to predict the next candle, it's to be the person who still makes sense of the chart after the adrenaline wears off. None of this is financial advice, just a framework and the latest verified facts as of December 23, 2025. And if you want a part 2, we can break down the lanes of space stocks one by one and build a simple checklist for how to track them without getting whiplash.